Hi, everyone. How's everyone doing? Richard, hey, Ryan, Hugo.
Morning, Dale. Can you hear me okay?
Doing okay, man. So, Mary, hello, and Ziggy. I don't know, someone digging for gold. Hugo, Richard, how's everyone doing today? Okay, so let me just get a new share here. I don't know why it says that, but anyway, it said it was muted. Okay. See my charts, Ryan?
Yes, mate. Got them.
Okay.
Yep.
Okay. So NASDAQ, S&P is due for a little rest. When you look at it, I mean, we're so far above the breakout right now. I would say that it would get vulnerable, and I'd worry about it taking out that right here. This was Monday when Powell was aggressively hawkish, and the market responded. So back here, I have different fib levels. Stell, I know you're talking about 46. But someone I follow had 45.17 at 61.8. He must be measuring a different fib, but I have it here at 45.50. And then when I look back, you know, this was a high in the fall, and we got through it a few times, but came into play here. Couldn't close above it here. So this 45.50 level is important to me, but I wouldn't be surprised to see a pullback. In fact, I know you guys, you technical analysts, have seen time. Are you a technical analyst, Ryan?
Definitely not, mate.
Okay, good. Anyway, that you could, you know, some people, if you use the wrong words, they get anal about it,
Yeah.
technicians. But, you know, we could pull back to the wedge here, right? Check a breakout on a wedge. The other feature, you know, I don't know if it's any big deal. We had a little bounce here, but 61.8 to the pip or two and EG.
Yeah, so, I started my build there. I'm long 83.50 and 83.00 at the moment. Happy to buy that all the way down to 80 if it goes.
Okay, it might try 78.6, and here's my rationale. Just if you just box this range, which it was in for a while, it's about 100 pips, and that would take you, you know, to the 78 level, around 82.60. So anyway, that's a possibility, but it doesn't have to. Getting good follow through in silver. If we can clear the highs, maybe we go to 25.5, and gold held where it had to. It's finding some resistance here at the 50 on the 4 hour. But if it gets through it, you know, 1960, 1970, kind of like a, you know, something like this from here.
Looks a bit like it's in what next mode, doesn't it? Doesn't really know what to do over the last week or so.
Yeah, compressing here, and you know, maybe the first move out, you know, the fake out. I think I'm looking at this, if we rally up here, as it being counter trend.
Yeah, it could be set up for decent, you know, sort of short-term break trade.
Yeah,
out of the consolidation there.
Yeah, you mean if a break here?
Yeah, break the or break that. What is it? The 15th high there. What's that, around 1950 odd?
Yeah, I just noticed while we were talking that, you know, if you go back to here before the big rally, that's 1975 or so, and then people up here, people will be calling it a potential head and shoulders top. Just something I just noticed this morning. So in the currencies, guys, you know, yen starting to lose a little mo, but you know, what do you do with it if you're not long?
It's back. It seemed to be back on the buy in Asia bus. You know, it went on a 10-day streak before the FOMC of going up in Asia in over Tokyo. It stopped over the FOMC and into that Friday, but it got back on Monday and Tuesday, albeit not as volatile as it has been. So we'll have to see. You know, you can't rule anything out. It could keep going to 125 at the rate it's been going.
Does 122 mean anything? Because I remember a long time ago when people had bullish scenarios in this pair, and you know, at the time it seemed aggressive target, but the 122 and a half. You have anything there?
I've got a level around about 121.87, I think it is. So there or thereabouts on the longer terms. So we've got some stuff there. The next big level after that, I think, is sort of 120. I think 122s, just off the top of my head.
Yeah.
And then we get into those big highs going back 2015, sort of 16.
Yeah. What a month in yields. So the 200 month is up here at 264. See if there's.
See, that's a question. That's a technical analyst question I've got for you.
Okay.
Do moving averages work on yields rather than the price?
Well, I think moving average. I think they mean something, just like on any chart. Yeah.
It's just a question. Yeah, because you don't trade the yield per se, do you? You trade the price. So
right.
As with everything, sorry, good morning, guys. As with everything technical and indicators and stuff like that, it depends on how many people look at them. So do people look at moving average on yields? I think they do. Yeah. Probably not the same as in the actual price itself. Yeah. But I've seen a lot of people look at all sorts of stuff. They look at, people do technical analysis on RSIs and, Fibonacci retracements on RSIs. So, you can go to depths of stuff.
Go get into the rabbit hole. Or just code it so people don't think you're crazy with what you put in there. So, crude bounce,
Yeah,
I've talked to some people, and even though this might be a failing rally, it still is tough to fade, isn't it? I mean, it's the overnight news. All it would take is, I guess, Europe decides to ban Russian oil, but we're close. This 115, 116 level is 61.8 back, and boy, would the administration like this to be a failing rally, and the Fed. So it's one of the biggest inputs, right? So if they could generate something like this from this, even though we're gonna might be weak on an Iranian deal, and Russia's one of the partners in the Iranian deal, we're pretty desperate for solutions. So, okay, Ron is saying nat gas is the play. I think it popped yesterday. The Widowmaker. Okay, so thank you for that. And any comment on the silver here? Stell, you still waiting for this convergence to be tested out?
I'm so trying to sit on my hands and do nothing. Gregor has a count which brings it close to the low 24s, which is really where I would like to get long. I have a bid at 24.01 for ages now, and still not doing anything. So still waiting. Yeah. But I think it's likely that we may have missed the boat. And I've always said if we clear 26.50, I'm gonna get long there as well, all the way. And then when we clear 30, I'm gonna get long there as well. So I'd rather get long at the lower levels, but either at 24 or above. I don't. In the end, I'm going to be getting longer at, whatever levels I can. But
maybe the dollar gives you that, one last push down towards that support level.
Maybe, yeah. I mean, we have to see also the Fed now told us that they're most likely to do bigger hikes than 25s. I mean, that's what Powell told us. So the market now is pricing higher yields, and yields are going higher. We're pricing big chunks of hikes coming, and metals are failing to go a lot lower. So this should
great
be
point.
Should be constructive for bulls. On the other hand, you know how it works. We could always get a little flush here and there, usually on the most illiquid times of the day, the usual stuff. I wish we get one of those so that I can get some more in. But at the moment, they're looking pretty decent.
the question we've been chatting about yesterday is, where does the money go if money piled into, and I'm talking, big global flows, if global flows piled into bonds on the back of QE because they had central banks as a stop loss, and everyone's unwinding, all those bond longs are now getting out. Where's the big global flows now going? What assets are they going into? They're going into stocks. They're going to go into metals. They're going to go into cryptos. Because it's all a hunt for yield. It's all a hunt for returns. And if the bond trade's over, that money's got to go elsewhere to find its returns. So, that's potentially a reason why stocks have been so resilient. Why the metals and commodities and gold haven't collapsed. And you've got to look at where the big flows are going. If you get an insight to that, then you know what the trades are, and you know where to position.
Yeah, I tell you, they keep hitting this TLT, and it keeps not confirming new lows. I don't know. What was the DSI? 8 or 9 on bonds? Pretty low down there. So I don't know. I wouldn't be short anymore. But people think it's the best, trade on the board still. This has been going on for 2 years, right? I mean, since after the COVID recovery. Anyway, yeah, I don't know. It's a wanting to hear the ice crack type of trade, but you could do it with like TLT calls. You don't have to buy note futures or anything like that. Looney trying to hold on by a thread. Again, strong dollar, and wow, what a big update in Canada.
This is really, really critical support for
right here, bro.
For the dollar CAD. Yeah, I mean, we were just talking about that in the chat room. And good morning, guys, by the way.
Good morning, buddy.
We were talking about the importance of this dollar CAD and in the chat room about how big it was. And you can throw in there that the Canadian has hit a lot of key levels against other currencies. One in particular I wanted to talk about today
CAD yen.
Is the CAD yen. Yeah, I mean it. Here, I'll take over.
Grab them.
I'll take over the screen.
Let's see a professional's charts.
Hey, you talk about technical analyst. I don't. I may not be a technical analyst, but.
It's spelled differently.
It is maybe a little bit.
And I
charts here. Okay, there we go. So now, before I get into this, let me mention, if you guys haven't signed up for the Traders Summit conference, make sure you guys do so. We've got a lot of great speakers. Wow. Yeah, a lot of, I'm actually really excited to have Jim Rickards here. So there's a lot of great speakers, and I'm not sure what my role is going to be with a lot of these folks, because I know I'm like you, Dale. I'll be interviewing a lot of them, but it's going to be a really cool event. Actually, Shy Girl and myself are going on Anthony Crudelli's podcast with the CME, to promote this. So it's going to be, we're doing that like in a week or so. I don't know. It's going to be fun. It's going to be a cool event. Anyway, make sure you guys register. It is free. So what's that?
Sign up.
Yeah. Here, I'm going to throw this in the chat box.
I put the link in.
Oh, thanks. Thank you very much. All right, so let's talk about the Canadian and how important this is. And this comes from somebody, just so you guys know, I was short the dollar Canadian for the last 2 days. So, I got out yesterday. So just, I want you to take that into account. I was short the dollar Canadian for the last 2 days, and let me tell you the reasons why. Okay, and we have this. You guys can see this really big wedge right now. This just for argument's sake, and so you understand exactly what this chart pattern is. This is a bullish wedge. What makes it a bullish wedge is we have higher lows and consistent highs. Now, just because it's a bullish wedge, don't think about the name and say, oh, it has to break higher. No. It doesn't have to break higher. And I'm going to do a little bit of drawing here for you guys. So the reason why I say it's a bullish wedge is you have, lows that are higher, right? You can see them all here, consistent highs. So when you have that, and you have a bullish wedge, there's probably about a 60% chance that you break higher, 40% chance you break lower, maybe even 65-35. Based on my experience of looking at charts for the last quarter century now, I'd venture to guess that those numbers are pretty correct based on my estimations on all the charts I've ever watched. And I always tell people I'm not a statistician. I don't keep a log of every bullish wedge that I've seen out there. Although what you guys don't know is one of the things about ForexAnalytix is you notice the last name in analytics. It's analytics with an X, not a CS, but with an X. We are actually measuring all that data behind the scenes on all the patterns in play that we've taken over the years. We haven't displayed any of that information, but we've been taking it into account for the last 5 years, gathering data on patterns and what they do. But that's another story. It's not anything for today. Just want you guys to know that's something that we've always done because we want to find out how accurate these patterns are over time. But anyway, it's a bearish wedge. Now I put in a pattern in play and I got short. And let me just say here, whoops. I had a pattern in play for the dollar Canadian support break, but it was because of a channel, okay, or a channel of the wedge. We were below the 200-day moving average for a couple of days. Let me zoom back in here. So we were below the 200-day moving average. We were below this horizontal spike low, and I'm like, okay, well, if it's gonna run lower, it's gonna run lower now. And I got short, and I ended up getting out of it yesterday for like a break even after being short for a couple of days because I was like, well, it's not following through the downside. Then I went and we were, yesterday doing a bunch of analysis on the yen, and you can see the Aussie or the dollar yen finally looks like we're if the candle sticks today, we have a nice little gravestone doji developing, maybe shooting star. We'll see what happens by the end of the day. But I want to show you the Canadian yen, and Dale, you were just you guessed it. The Canadian yen, just so you guys know, hit the 161% extension of the last leg lower, last major leg lower. If you guys are harmonic pattern type of people, like purple people eaters, that's a butterfly pattern, right? It also hit a 50% retracement on a weekly basis, okay? And that would be from the high back in November 2007 to the low in 2009. And the reason why you measure that and you don't measure this low over here is because that is the ultimate low. This low never took it out. So for those of you that measure fibs, if you're measuring from here, that's wrong answer. That's not how you measure fibs, just for common knowledge, all right? Because I'm sure 50% of you
it's not
measuring those numbers probably measured that number, and your numbers would be totally off. So anyway,
good lesson.
Hey man, I learned how to draw fibs with protractors. When you learn to do it manually with protractors, you really get to learn the real rules, other than getting some sort of charting program and plotting your numbers out there, like really simple stuff. Now, when you do it manually on white paper for
prehistoric, man,
prehistoric years, you do that in the 90s, you really learn how to draw your fibs, right? So anyway, we hit the 161% extension, 50% retracement, confluence. You could argue that we're probably, you could almost argue that we have some sort of channel resistance there. So guys, what I'm saying is that's a confluence of resistance. And, if you're a ForexAnalytix subscriber, you knew that I was shorting the Canadian yen last night up at the 92 or 96.40 level. And so, that because of that, I think the loonie is at risk of bouncing. And now going back to the loonie, let's go back to the loonie here. You know, if we can get just above, and this is, you know, maybe a little, you know, getting a little cutesy here with, you know, some chart patterns, but, you know, if we can get, you know, above like maybe 126.25, you know, that's when you start to see a little bit of a squeeze. And, you know, one of the things that you're probably not looking at the moment is crude oil squeezing. I don't know why crude is squeezing. It should actually be going lower somewhere around here. So if crude actually rolls over a little bit sometime intraday, you know, that could give a little tailwind to the dollar Canadian move higher back above 126.25. Anyway, so you guys want to know like why I'm set up for Canadian yen shorts, why I started shorting it last night. And by the way, you know, just if you guys want to see, you know, our chat room, and I'll just take you over to the trades room just so you guys can see this really quick. You know, last night, you know, I'm like, added slightly to Aussie Canadian shorts. I'm 1/3 size each. That was last night at 5:56 p.m. That's just the trades room. You can kind of see, you know, open positions that I've opened up. And, you know, if you guys are in the funding program, you know, the trader funding program, and you want trading ideas, you know, whether you're in the chat room, the general chat room, the Flowonomics room, the trades room, there's plenty of great ideas around there. And that's one thing that, you know, when you're going through an assessment program, trying to get funded for larger accounts, you know, having ideas and, you know, ideas of what to do and what to trade, that's the most important thing, right? Rather than trying to do it on your own by yourself, trying to figure out what the hell you should be trading. Having some ideas is important. So anyway, that's my setup for the Canadian yen, and you guys now know my whole reasoning for doing that. I think it took me less than 5 minutes. So hopefully that made sense to you guys. Any questions? What do you think there, Dale?
Yeah, I like it. I mean, all that confluence, how can you ignore it? You know, people hunt around for things to do, and I always say you don't, that the great trades will hit you in the face like that one hit you.
Yeah. Well, hopefully it doesn't hit me in the face.
Well, I mean,
in the P&L.
It's so compelling that, you know, it's hard not to see it.
Yeah. So,
I'll give this a shot. That to me is
right.
I
mean, that's what most traders do, right? Well, I'll just give this a shot. Well, why don't you try planning it out a little bit and understanding why you're doing it? I mean, that's really, you know, important. The whole mantra of there's this guy Dean I used to trade with way back in, you know, in the 2003 2004 range. Name was Dean Malone. And, you know, him and I do the morning edge, and he would do like this other, you know, like, I forget what his webinar, but he had a Texas slang, you know, like, I just trade my plan, work my plan, trade my plan. Yeah. He's like, you know, plan my trade, work my plan. It's like he'd say it in a Texas twang all the time. Yeah. And but it's that sticks with me. So like in my head, every time I trade, I'm like, you know, plan your trade, work your plan. I hear it in a Texas twang all day long, and I hate it. I hate you, Dean.
People don't spend enough time doing the type of analysis that you do, Blake. I mean, you spend hours doing this, and I think people, you know, just kind of glance over and really don't put in the time to really think through their plan.
Yeah.
You know, it takes time.
Yeah. So anyway, you know, just some ideas about the Canadian here, and yeah. Hey, Ryan.
Yellow.
How's the home restoration hardware project going? By the way,
I don't know. It's maybe Friday they'll be finished, but I'm hoping.
Oh my god!
I can move back into my office after I finish this.
That's pretty exciting. I remember we went through a home remodel project. We did like at the time, it was like it was like a third of that cost of my home. We remodeled it when my first son was born, so 17 years ago. And we basically knocked down walls and, you know, built out stuff. And it was like a 3-month process living in, dust.
Construction zone.
Ugh, so horrible. I really feel bad for you. So hopefully you can get settled in soon. Anyway, so what are your thoughts here? Anything you got going on? Anything that you're thinking this morning? And by the way, I got another trade set up. People in the chat room already know what I'm doing. But what are your thoughts here?
Yeah, I've been looking at dollar yen this morning. I took a little feeler trade. I bought a 120.50 put in dollar yen with an 8th April expiry.
Nice.
Just if we are going to find a top into month end, then I want to be positioned without having much risk to it. It cost me 72 pips, so pretty low risk trade. If we do find a top up here into month end and it falls back after, then I'm going to be positioned for that. But I've also ramped up my stops on my long term trades. Now some of them are up to 117. I'm long on average 104.40. So I've locked some of those in at 117 now, because when you get a move up like this, and you've been sitting on a trade for the best part of 18 months, you need to lock it in case we do see a turnaround.
Yeah, one of the things about the yen, and I got to say this that bugs me, everybody in the ForexAnalytix chat rooms knows exactly what yen pairs I'm focused on right at the moment. But you guys all know that I do have Canadian yen shorts now. All the viewers that are listening in right now. One of the things that does bug me about the dollar yen is I don't see any technical reason for it to reverse here. We're in between levels. So I don't have that extra layer of confidence in the dominant pair for me is always going to be the dollar yen when I'm trading all these yen pairs. Secondary currencies, whether it's the Canadian or the Kiwi or the Aussie, or even the euro, I really base most of my decisions off the dollar yen first and foremost. And we're setting up a potential doji. It could be a gravestone doji, it could be a spinning top, it could be a shooting star. I don't know. We've got a lot of time left in today for North American traders to really determine what that looks like. But I will say this: I don't like where it's at. It's in between fibs. It's in between. I guess you could say, well, the big figure number 121 held, but did it? We overshot it by 30, 40 pips, and it's really hard to tell at this point. I have no big levels that it is rejecting, and that's my biggest issue that I have with the yen. It's kind of like. Yeah,
that's why you need to come down to the shorter time frames. If you come down to something like a 15-minute,
how can you do a 15-minute on a dollar yen that's flip flopping 300 pips a day?
Quite easily. This is what you need to watch. The price action all day long. Because look, we've got a little bit of a top there at 121.20, which was sort of secondary support, secondary resistance after we made that high. So that's your first sort of horizontal level there. We've got the highs up at 121.30. If you get a move up there and it holds just below and around about maybe 120.30, then that gives you a bit of confidence to try a short. It's not a put your house on it short, but you're looking at the price action saying, well, we can't actually get back to those highs, but if we're going to test up there, not get as far and turn around again, then that's where you try a little short with a stop above the highs and you see where it goes. And that, if you buy a trade, if you do happen to catch a turn and it's a big turn, you're going to sit on a big winner, or worst case, you might just nab a few pips and 20, 30, 40 pips and you're happy with that.
I just did a reverse mortgage and went double long yen with my mortgage.
I'll take the other side. How much is your house worth?
Just kidding.
I'll tell you where to drop the keys off.
Right. So, and just so you guys know, like the 15-minute chart is really the smallest chart that I do look at, unless it's a news event, like, it's a jobs report or, interest rate decision where everybody's kind of unsure. Then I'll take it down to like a 5-minute chart, but usually a 15-minute chart's you can see it on my setup. It's really the minimum setup I go to, which I think is a good one. You know, if you guys aren't short and you're trading this intraday, like if I was going to short it intraday, I would just be shorting it up against this, probably like these trend lines. So if you can get a bounce back to 121, I'd probably be selling it somewhere up there. If I was going to play, I don't think I'm going to be playing the dollar yen on the short side. I got enough yen exposure, you know, you can call it a feeler. I'm just kind of like partially exposed at this point, you know, not fully exposed because obviously, you know, I could have had the same argument about the yen. Well, I did have it at like 120. I could have had the same argument at 119 and 118. Yep. And here we are at 121. Yep. So, you know, it's not, you know, for me, it's like, yeah, I don't know if I really want to get too aggressive here. But I do, the one other thing I want to point out is I do think the S&P has and this is from the week ahead video. If you guys watched it, it's, you know, the double bottom, I was expecting us to make a move to the, you know, above the 200-day moving average. You know, 45.20 is what I was telling everybody in the chat room. Yesterday's high was 45.20 and like 0.2 or something. Really,
I think it was 61.8. Peter had it 61.8 back at 45.17. I don't know where he was measuring its fibs, but
I don't know where that would have been measured from either. I mean,
but a double bottom target around the same level is interesting.
The 618 is 45.51. So I mean, we came within, you know, striking distance of that. I mean, you know, horseshoes, hand grenades, and technical levels. It's all close enough, right?
Yeah.
And you know, close counts for technical levels, horseshoes, hand grenades.
Yeah.
Yeah. Is that it? Are we done?
Relationship.
Are we finished?
Yeah, and I had a cancellation.
Are we finished? Well, shoot. All right. Oh, your interview canceled?
Yes, I know. Yeah, he cracked a tooth.
Oh, dude, that's not fun. That's not.
But he's a writer, so he doesn't have to be on camera. So
anyway. He's got a good face for radio, just like me.
Yeah.
All right. That's awesome. Well, that means we can talk a little bit longer. Yeah. So I want to. Is K-Man still around?
He's so quiet. I don't think he's around.
Is he not here? No, I think he bolted. So it looks like Steve is here and Stelios are here. So hey guys,
I am here. Hello.
Hey.
They are here.
Oh, they are here. So before you know, we let Dale off the hook, since Dale's like, ooh, I get to go have coffee early today. Because his guy's not here. You know, let me ask you guys.
I cry when they don't show up. You know how
what's that?
I cry when they don't show up. You know.
It's hurtful.
Yeah,
it's hurtful. I know. You're a sensitive dude.
I'll get over it.
You're a sensitive dude. All right. So, Stelios, what do you think? What are you looking at today aside from silver and gold?
Well, one thing we have to mention is UK CPI. Did you guys catch that?
No.
It came in at 6.2% year on year, up from 5.5% and higher than 5.9% expected. So inflation everywhere. And
but why did the sterling slip and come back to the inverted head and shoulder pattern neckline like that? Ryan, what's wrong with your sterling, Ryan?
Ryan.
It's Ryan's fault. What's wrong with your sterling? What we had inverted head and shoulder pattern.
We toss a coin each morning. Are we going to buy it or are we going to sell it?
Yeah, right. Okay. So, Stella, as you were just pointing out, inflation is rampant in the UK, and even though you don't live there, you lived there for 20 years.
Yeah.
So, what do you make of it? Why is the sterling so weak, Stella?
Well, the cable is down because the dollar is actually strengthening across the board. But we also
that's
have,
what you're going to blame it on. You're not going to blame it on Ryan.
I blame Ryan and Steve for everything. But we also have Rishi Sunak, the Chancellor, speaking today. I think it's the spring budget statement, but nothing, you know, there's not anything major that's expected. But
just taxes. If anything mentioned on taxes is probably going to be the prime mover of the pound. Otherwise, it's going to be talking about giving people, you know, 10 quid off a fuel bill or bits and pieces like that.
Is he speaking right now or is he speaking later?
I think he's on shortly, if he's not on already.
Well,
we're negating that pattern.
I might have to pull some of my sterling profits right now here or there very shortly.
Okay. Yeah, because we're negating that pattern.
No, we
While
are.
we're on the data, I follow the US MBA mortgage application data. It's only like a weekly number, so it's not huge, but it's shocking again today, and it's been shocking for several weeks now, and it can often translate into the main numbers. So something to keep an eye on, the main housing data over the next month or two ahead.
With 10-year and 30-year rates going higher, mortgage inflation going lower. That's no surprise, I don't think.
Paul was just saying it's a UK budget day and we're waiting for the announcement now. From Sunak, is that what we're waiting for?
Yes.
Okay.
Yeah, it's a statement. It's not the full budget. That's in November.
Okay. All right. Okay. Fair enough. So yeah, the UK's inflation data is hot. Inflation data everywhere is hot, but
I just wanted to add one thing. So inflation is hot, and the market's now pricing a chance of a 50. Actually, more than 25 for the next meeting. For the is it the May meeting that they're pricing? I think
for the US, we're gonna get a half point.
For the UK as well. Somewhere I was reading. I need to check the SONIA rates because I'm no longer market making them, so I don't know them by heart. But I need to check them, and I think the UK is also pricing over 25 for May. So my point is that we have, quite a bit of hikes, quite a bit of tightening priced into the UK. We have definitely quite a bit of tightening price into the US, and we have still very little price into euros. And that's why I really like getting long euro pound. I think the support near 82.5, 83 is really strong. And I said in January that I think this is going to be the year of the euro. Okay, maybe we've had a couple of months where we're going sideways, maybe a little bit lower, but I still think that, when the market goes one way like this and pricing all sorts of stuff for US, the Fed and the Bank of England, and nothing for the ECB. I know the ECB have been dovish, but inflation in Europe is also screaming higher. There's no way they can hold off and just be out of sync with everybody else. So I think this is going to happen. I think the market's going to start pricing that, and that's why I think the euro is going to outperform in the next 3 to 6 months.
Were you reading the basic technical analysis from last night that said the 83 pence level would be critical support for bulls overnight, and we'll be looking for a bounce from those levels? Were you just reciting what you read on ForexAnalytix this morning?
I think the basic technical analysis has been listening to myself and Ryan. That's what that's been doing.
You were just you can't claim victory when it was already claimed before you.
No, we claimed it before the claim.
All right. Well,
it's not about who gets the credit. It's about helping people make money.
No,
exactly.
ForexAnalytix was right before Stelios. That's all that really matters.
I know.
Just kidding. All right. No, great. But let's go back, and obviously I'm joking a little bit here, but let's talk about why. I know this is going to be the year of the euro. I have to admit, and Steve, we haven't heard. We heard Steve here a bit ago. I'm not sure if he's still here. I know today.
He is, I think.
Okay. Oh, you are here. So I know we've talked. We haven't talked a whole lot about the euro this morning, but wouldn't you guys admit? I mean, the euro's held up pretty well.
Yes.
Despite everything. I mean, I would have thought by now, just if you would have asked me, a month ago, or a month and a half ago, hey, Russia's going to invade Ukraine. Where do you think the euro is going to be? I'd be like, parity, maybe.
Yeah.
We've actually held up pretty well despite everything. So, and that's, good, I guess, right? If you're long euros, but it is still trading heavy, and I still don't think that it will break above 111.20 without some sort of, and I know I've said this for the last couple of weeks, but I don't think we're going to break these levels until there's some sort of de-escalation, I guess, of some sort. Yeah. So what do you think about the euro here, Steve, and where we're currently trading?
I still don't see the bullish case scenario, technically speaking, for the euro.
Well, technically speaking, I agree with you. I don't yet, but is there anything that would change your mind since you're going to say technically speaking? So let's say technically speaking.
111. 111.40, 111.50 is the first area of resistance. Now, as long as we trade below it, I really don't see any argument to be long from a technical perspective. Now, from fundamental perspective, I already made my comments yesterday, saying in essence that the finance minister of Germany practically unknowingly photographed that he's expecting, some change of stance from the ECB, if you read between the lines. Now the question is that change of stance going to be bigger than the repricing that the market has to do with seeing that the Fed needs to move faster than they initially believed it would? We'll have to see. Now, admittedly, I wouldn't be chasing euro lower here, right? No, in no way. But between I wouldn't be chasing euro lower and euro turning higher, there is a huge distance. And as I said, 111.50 is the minimum resistance area I would expect to see broken before I even consider any bullish case scenarios.
All right. Well, you heard it from Steve. I mean, I agree. The 111.20, 111.40, 111.50 area, I think we went as high as like 111.30 something on that spike higher that tripped all the people that were trying to chase the euro higher above the, they thought it was breaking out. I mean, how many people got stuck, either covering shorts or getting long right there, thinking that, oh, look, we're breaking out, we're reversing. So everybody that got caught there, that needs to be broken, is what Steve is pointing out. So
we've knocked at the door.
What's
twice. That? We've knocked at the door twice. If we get there again, we'll break through the door.
And I've said this, and I'll say it again, and I've said it, on the week ahead video, maybe, or maybe on the morning edge yesterday or the day before, it all kind of blends together. But any dip to 108.50, and I'm a buyer. I mean, because this is the, your risk is managed as well as you can manage it at that level. I mean, this is the creation of the euro. Low post creation of the euro low, and I mean, as long as we're above 108, the risk is higher. We start trading below 108, and I don't think I want to be long anything euro. And I'm going to leave you guys with this, because if you look at some of these euro crosses, this is the euro Aussie. Now, I've been playing this thing to the short side pretty aggressively the last few weeks. I shorted it as it broke down through here, and I've shorted it again at 152, that breakdown point. But you look at this Euro Aussie, I'm going to leave this with you guys. That's what a bear flag looks like in the Euro Aussie. And that points down to, 136.50. And I keep asking myself, like, how in the hell are we going to get down there? Like, how in the hell is that going to happen?
In my opinion, the breakout.
Steve, hold on. Let me just finish my thoughts. When I sit here and I look at a currency pair and I go, how is that going to happen? I start thinking, well, one of the catalysts that would drive it down there is the euro would have to break below 108, and that because it's such a big key level. But anyway, that's just some thoughts. Go ahead, Steve.
Not necessarily. I just think that we're in a period that commodity currencies are going to seriously overperform, and looking at the big picture in all these crosses, Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, so on and so forth, I think we've had major technical breakdowns after a long period of consolidation. So I think there is a lot more to go in all these crosses. and
that's the other point, Steve, is I got asked at the end of 2021. Like, I think it was the trading battle. I had to film a little video about like what my favorite trade of 2022 would be. And I filmed one of two. I said, shorting the dollar index if it got to 100, or buying the Aussie dollar if it got down to 70 cents. And because in my mind, I wanted to buy the Aussie dollar at 70 cents in 2022, back in the end of 2021. And when we got to 70 cents this year, a month and a half ago or whatever it was down here, I bought it and got aggressively long down here as we were breaking down. And a lot of people were like, oh, I can't believe you're buying that support. I'm like, I've been wanting to buy it down there forever. But in my mind, I always believed that the Aussie dollar is going back to parity against the dollar. And now I know it's not going to do that tomorrow. It's not going to do it anytime in the near future. But I'm just saying that I believe that the Aussie dollar longer term, if you look at this longer term, guys, and if you guys live in Australia, this is kind of the way I view it. Is happening longer term. We're not going to go up here tomorrow. But I think over the next several years, we could see that. So to your point, Steve, underperformance of the euro versus, some of the peers. I mean, we could have the euro trade back up to 115. The Aussie dollar could trade back up to 85 cents, and that euro Aussie will be trading a significant amount lower as a result. So anyway, some what?
I'd like to see 85. Thank you very much.
Yeah, I mean, hey, look, I think
I'd like to see 75 first.
Yeah, well, I do think that that's the risk, and I think there's a lot of people that keep trying to sell the Aussie and sell the Kiwi on the short side and try to get short, they've been standing in the way of this move, for the last couple of weeks. A lot of people have been trying to fade that, and I'm like, yeah, you guys. We are in a different environment today than we have been in my entire career of trading the markets. Yes. We're in an inflationary environment, like a big one too. This is a real one. This isn't like, oh, look, the Fed's trying to get CPI back up to 2%. No, we are sustaining high inflationary pressures, which is going to weigh on markets globally for a long time. So you have to be buying these commodity currencies on dips, in my opinion. They do not go down very long. And when they go down, a lot of people think they're going to go down because of some risk aversion. They end up actually being buoyant during risk aversion. So
we witnessed it.
Look, if you guys want to talk markets, I'm going to suggest that just jump in the ForexAnalytix chat room, because we don't talk religion, we don't talk politics, we talk markets and Netflix shows when nothing's moving. So, you got the general chat room here, the news and research room where people upload all their, headlines. And this is where the macro chat room is, Flownomics, all the smart people are in there. I'm not in there. All the other smart people are in there, right? Ryan. And then, the trades room, we have the Spanish chat room, which, it's going to be very active actually in the next couple of months. So, try out ForexAnalytix, $1 for 10 days, try it out, jump in there and jump in the community. But Dale, I'm going to let you wrap things up because we have the morning edge coming in less than 30 minutes. Steve, Stelios, Ryan, I miss K-Man, but Dale, thank you guys for being here today. Appreciate it.
Thank you.
Okay.
Cheers, everybody.
Hey, team, I want to say a great job on putting together one of the best guest lists I've seen for any online webinar for a long time, and diverse, not from the same country club, a lot of different people, different personalities, different methodologies. Going to be a great event. So guys, like Blake said, it costs you by, I think, 5,000, 10,000 for rooms. So get registered for this, and you're going to have some great ideas after a webinar like this. You may become familiar with someone who you may have known from afar, but begin to like their work. So we're doing this, of course, it's a promotion, but like everything else, our mission statement is to build up and edify traders every day. And we went through a lot of effort and expense, and because we have a decent rep, people are look forward to participating on this platform with us. So sign up for that. And I do believe, it takes money to make money. So give that a shot. You probably risk what the assessment fee would be within a day or a month. And it's limited risk and you have time. So, we're trying to do things to help advance your career. And we have a couple of products. Some are free and some are to get you funded so that you could trade size and learn to be able to be disciplined. It's definitely, if you think you're a disciplined trader, then this is a challenge for you.
Dale, I have to mention I'd say there's a lot. There's companies that actually do allow you to prop trade, right? They do these assessments. Yeah. Do you know what they do is they force you into time, and they say, all right, you have 3 weeks to complete your course. And then what happens is you start off slow and you do a few trades, you're getting your feet wet. And then next thing you know, you realize you have 1 week to complete your assessment. And then you start making your force trades, right? We don't put a timeline on you guys or gals. And that's the differentiator. Well, that and
that's a big one.
Community. Well, I mean, it's a big one because they do that specifically because they're trying to force you into taking multiple assessments before you can pass. For us, we just want you guys to pass. So, and trade and get access to the larger trading accounts. So, and plus we give you ForexAnalytix premium on top of it to help give you ideas. So anyway, that's the trader funding program. It's
as cool. You guys could see, it's all coming together to help you make money, bottom line. So thank you, Blake, for, all the hard work and the programs you put together. And
it's not me, it's the team. I'm just part of it.
And the team. And the team that you put together, best team on the net, in my opinion. So, guys, don't just count your pips, count your blessings. Participate with us, and we have a great guest Friday. Mark your calendar for Dr. Pippa Milgram, and she's the daughter of Harold Milgram, who I've interviewed over the last year or so. And she has some very interesting forecasts that, affect not only market conditions, but perhaps what you're going to do with some of your conservative cash. So look forward to that. Have a great day. Join the team on the Morning Edge and get an edge by being part of ForexAnalytix and their community. And we'll see everyone tomorrow, and good hunting. Thanks, Blake. Dale. Thanks, team. You're the best, man. The dream team's the best, in my extremely accurate and humble opinion, and subjective one. All right, guys. See ya.